Hello, Super Savers. I hope you're doing well as always. The IRS has significantly increased the 2023 contribution limits for retirement accounts, health savings accounts, and flexible spending accounts due to the overall increase in our cost of living this past year. Meaning, all of us Super Savers can stash away even more cash next year in these tax-deferred savings vehicles. For those of us in the community who are still working, that's at least a small compensation for the rampant inflation that's been eating into our earnings and savings in recent months. Today's video will go through what these 2023 contribution limits are for 401ks, 403bs, most 457 plans, and the federal government's Thrift Savings Plan, simple IRAs, and Roth and Traditional IRAs. And at the end of the video, I'll also talk about the increases for health savings accounts, HSAs. As a quick reminder, HSAs are considered by many as one of the secrets for successful retirement planning because they're triple tax free. So not only are you not taxed on what you put into an HSA, you're also not taxed on the growth in your HSA, and you're also not taxed when you withdraw funds from your HSA to pay for qualified healthcare expenses. And best of all, HSAs are accessible to all as there are no income limits. You just have to have the appropriate health insurance plan. More on that later. For 401ks, 403bs, most 457 plans, and the federal government's Thrift Savings Plan, if you're under age 50, the inflation-adjusted employee contribution limit increased an unprecedented $2,000 from $20,500 in 2022 to $22,500 in 2023. And the limit on total employee plus employer contributions increased $5,000 from $61,000 in 2022 to $66,000 in 2023. If you're age 50 or older, in addition to the general increase in the employee contribution limit from $20,500 in 2022 to $22,500 in 2023, your catch-up contribution limit goes up $1,000 from $6,500 in 2022 to $7,500 for 2023, for a total contribution limit of $30,000. So if you're at least 50 years old, you can contribute over 11% more to your employer-sponsored retirement plan in 2023 than in 2022. This brings the limit on total employee plus employer contributions, if you're age 50 or older, up from $67,500 in 2022 to $73,500 in 2023. And as a reminder, you always have until the end of the year to put money into your employer-sponsored retirement plan. A simple IRA, Savings Incentive Match Plan for employees, is a retirement plan designed typically for small businesses with 100 or fewer employees. The contribution limit for simple IRAs will increase $1,500 from $14,000 this year to $15,500 in 2023. And the catch-up contribution limit, if you're age 50 or older and participating in this type of retirement plan, will also go up by $500 from $3,000 this year to $3,500 in 2023. The contribution limit on Roth and traditional IRAs increases $500 from $6,000 in 2022 to $6,500 in 2023. If you're age 50 or older, your catch-up contribution limit has not changed, unfortunately. It's $1,000 this year, and it will be $1,000 next year. So, as many of you know, I'm a big fan of maxing out your Roth contributions within the calendar year, basically between January and December of any given year. But if cash is really tight right now, with costs skyrocketing all around us, and you can't max out your Roth IRA before the end of this year, remember that you have until April 15th, 2023, the tax deadline essentially, to make your 2022 Roth IRA contributions. So go into super saving mode now if you find you're a bit short on those contributions. Now, let's go through the income phase-out ranges for both Roth and traditional IRAs. Because while employer-sponsored plans, such as 401ks, don't typically have a maximum income limit, Roth IRA contributions and the deductibility of traditional IRA contributions will start to phase out and eventually not be available at all past certain income levels. As most of you may know, eligibility for a Roth IRA is based on your modified adjusted gross income, your MAGI. To figure out your MAGI, first grab this year's Form 1040 that you've already filed. Then go to line 11 to find your adjusted gross income. According to the IRS, your MAGI is your adjusted gross income with the addition of the appropriate deductions, potentially including all of these items here. I've linked this TurboTax article below in case you want more details. Of course, it may just be easier to ask your tax preparer or accountant if you have one. In any case, to qualify for the maximum contribution into a Roth IRA, if you're single, head of household, or married filing separately, your MAGI must be less than $129,000 in 2022. And if you're married filing jointly or a qualifying widow or widower, your MAGI must be less than $204,000 in 2022. Those income thresholds increase by a respectable $9,000 and $14,000 respectively to $138,000 and $218,000 in 2023, which is great because it means more super savers will qualify for Roth IRAs in 2023. Also keep in mind that the actual amount of your Roth IRA contributions starts gradually reducing at certain levels of income, what is known as the phase-out range. And above a maximum level of income, you're not allowed to contribute at all to a Roth IRA. The phase-out range, if you're single, head of household, or married filing separately, is currently between $129,000 and $144,000. In 2023, this range will increase to between $138,000 and $153,000, meaning if your MAGI is $153,000 or more next year, you won't be able to contribute at all to a Roth IRA in 2023. The phase-out range, if you're married filing jointly or a qualifying widow or widower, is currently between $204,000 and $214,000. In 2023, this range will increase to between $218,000 and $228,000, meaning if your MAGI is $228,000 or more next year, there's no Roth IRA at all for you in 2023. If you're married filing separately and you lived with your spouse at any time during the year, your phase-out range stays the same in 2022 and 2023, between $0 and $10,000. In this case, if your MAGI is $10,000 or more next year, you're not eligible for a Roth IRA in 2023. With traditional IRAs, you may be able to deduct some or all of your contributions if you meet certain criteria. Criteria that's tied to your annual modified adjusted gross income, your MAGI, and whether you're covered by a workplace retirement plan. This deduction is gradually phased out if your income goes above a certain level. Here are the changes in the phase-out ranges that you can expect for next year. If you're single, head of household, or married filing separately, and covered by a workplace retirement plan, the phase-out range will increase from between $68,000 and $78,000 in 2022 to between $73,000 and $83,000 in 2023. If you're married filing jointly, and if the spouse making the IRA contribution is covered by a workplace retirement plan, The phase-out range will increase from between $109,000 and $129,000 in 2022 to between $116,000 and $136,000 in 2023. If you're married, filing jointly, not covered by a workplace retirement plan, and you're married to someone who is covered, the phase-out range will increase from between $204,000 and $214,000 in 2022 to between $218,000 and $228,000 in 2023. If you're married, filing separately, and covered by a workplace retirement plan, the phase-out range for this year and next year will stay the same, between $0 and $10,000. Now, if your income is below a certain level and you contribute to a retirement plan, you can claim the saver's credit on your federal tax return and lower your tax bill by as much as $1,000 if you're single or $2,000 if you're married filing jointly. The annual income number used in this case is adjusted gross income, AGGI, not Maggie. To figure out your AGGI, go to line 11 of this year's Form 1040 that you've already filed. So the income limits for the saver's credit have also gone up for 2023, meaning you could earn a bit more in 2023 and possibly still qualify for this credit. Here's what to expect. If you're single, married, filing separately, or a qualifying widow or widower in 2022, you must earn $34,000 or less. In 2023, this number goes up to $36,500. If you're head of household, in 2022, you must earn $51,000 or less. In 2023, that number goes up to $54,750. And if you're married filing jointly in 2022, you must earn $68,000 or less. In 2023, that number goes up to $73,000. According to the IRS, you're eligible for the saver's credit if you meet the income limit requirements we just went through, and if you're age 18 or older, not claimed as a dependent on another person's tax return, and not a student. The IRS considers you a student if during any part of 5 calendar months in the tax year you were enrolled as a full-time student at a school, or you took a full-time on-farm training course given by a school or a state, county, or local government agency. A school includes technical, trade, and mechanical schools, but it does not include on-the-job training courses, correspondence schools, or schools offering courses only through the internet. If you want more information on the saver's credit, then click on these links here. I've included the link for this IRS page in the description below as well. Finally, one of my favorite wealth building and retirement planning tools, a health savings account that allows you to build savings for future medical expenses in a triple tax-free setup. No taxes on the amounts you put into your HSA, no taxes on the growth of the amounts while they're in your HSA, and no taxes when you finally pull your HSA funds out to pay for qualified healthcare expenses. Small wonder many consider it one of the secrets to preparing for a successful retirement, especially with healthcare costs typically rising even faster than the rate of inflation. Do keep in mind, though, that you need to be enrolled in an HSA-eligible high-deductible health plan, an HDHP, in order to qualify for an HSA. Be sure to check out this HSA video here if you want to learn more. So HSAs, the annual HSA contribution limit for self-only coverage will go from $3,650 in 2022 up to $3,850 in 2023. And the annual HSA contribution limit for family coverage will go from $7,300 in 2022 up to $7,750 in 2023. Now, flexible spending accounts, and health reimbursement arrangements. The annual FSA contribution limit will increase from $2,850 in 2022 to $3,050 in 2023. And if your employer's plan allows the carryover of unused FSA amounts, the maximum carryover amount will increase from $570 currently to $610 next year. For health reimbursement arrangements, HRAs, the maximum amount employers may contribute goes up from $1,800 in 2022 to $1,950 in 2023. All right, super savers, let's max out these retirement accounts and health savings accounts for 2022 if you haven't done so already, and save even more dollars in 2023. As always, if you enjoyed this video, then don't forget that thumbs up, and see you again soon with another exciting wealth building video.